Hey everyone, I hope you guys are doing well. Today we're looking into KLA Corporation. What this company basically does is it offers process control services to semiconductor companies. Here we can see from all-time high that it fell of about 25%. Now, full transparency, I have been adding this stock to my portfolio and buying some shares. Before losing any time, let's just see the growth. Again, as you guys know, we're going to see if this growth is actually consistent right after. First, we can see that from last year, the revenue has been increasing, net income also increasing very fast, free cash flow, book value, and tangible book value. These are all increasing at a very fast rate. As you guys know, growth is important, but what's more important in my opinion is consistent growth. So here we can see the revenues growth from 2017 to 2022. We can see how nicely and consistent the revenue has been growing since 2017 with a compounded annual growth rate of 20%. This is solid growth. Same thing here for operating cash flow. We can see a compounded annual growth rate of almost 25%. And we can see from the graph that it's also growing steadily and consistently. Alright, so here we have a forecast of the semiconductor market size worldwide in billion US dollars. And this is broken down by application, for example, for the smartphones, the automobile, industrial electronics, servers, data centers, and storage. The point here is that you can see that from 2020, 2025, and 2030, the forecast for every single application of the semiconductors is expected to grow really fast over the next 5 to 10 years. And if these growth actually are happening as forecasted, then this is going to boost and have big impact on the direct sales and the services that KLA is offering. In other words, if the semiconductor market size keep growing as it is forecasted, then this is a really good thing for the revenue growth for KLA in the next 5 to 10 years. Alright, let's now look at the profitability of the business. So first we can see that the gross margin is at 62%, operating margin almost 41%. We can see that the net margin and the free cash flow margin are pretty close to each other. This is something you want to see in a company. What this means is that most of the earnings that the company is bringing in is turned into free cash flow, which is a good thing. Now, if you look at the returns, we can see that the return on invested capital is at almost 54%. Return on equity is at 77%. This is solid return on equity. Return on asset is at 26%. Basically, the company is utilizing its equity and assets in a very efficient manner. Alright, let's now look at the financial health of the company. So first, if you look at the current ratio, it's at 2.33, which means that the company doesn't really have any financial distress in the short term. One thing to note is that the intangibles as a percentage of total assets is at almost 30%, which means that 1/3 of the assets that the company is holding are not physical, they're not tangible. Okay, I did some diggings and this comes from goodwill, and goodwill is usually generated when a company does an acquisition, and in the case of KLA, it is the case. In 2019 they made an acquisition of about $2 billion, which is a pretty big acquisition, and this is mainly where all these intangible assets and the goodwill is coming from. So that is just something to keep in mind. Now here we can see that the company is buying back shares. The shares are decreasing at a pretty good rate. This is really good. So what I want to show here is that the company is giving out a dividend yield of 1.28%. And if you look at the cash flow generated by the operations of the company, it's generated $2.1 billion. And you can see that the dividends that they're paying is about $550 million. So here you can easily see that they can afford this dividend. If you guys enjoy this kind of content, please subscribe and leave a like. It really helps the channel. Alright, so let's now look at the analyzing tool to see what price we should pay for this company according to our assumptions. So first thing first, I like to have a discount rate of 12%. Some people might prefer 10%, but I prefer to have the margin of safety. We're looking at a 5-year horizon. So if you look at the free cash flow growth, we can see that for the past 5 years it's been steady around 20%. Let's still go conservative. I'm going to go with 13, 16, and 19 on the high end. Price of free cash flow, we're still going to go conservative. Let's do 14, 16, and 18. And I'm going to assume that they're going to keep buying shares at 1% as if they did in the past 5 years, even though they're buying back shares way more aggressively than that. And alright, so here we can see that for the mid and high assumptions, we're in the green. So if you believe these assumptions or you agree with them, then this is a good price for right now, and it would be fairly undervalued. This doesn't mean you should go and buy the stock right away. You should do more research. And if you believe that these are more realistic assumptions for you, then you should maybe wait out for the price target to reach below the $275. Alright, let's do a quick recap. So first we saw that the revenue is growing at a consistent rate. The company is highly profitable. The company is a good financial health. And we saw that the valuation is in between fair and undervalued depending on which assumptions you agree with. So that was it for KLA, guys. If you enjoyed this video, please join the community and subscribe, and I'll see you on the next one.